Bank of Japan?
Yeah, absolutely. You know, I've been at Bloomberg 20 plus years, and this is probably the most significant big change at the BOJ, of course, all in one fell swoop in those 20 years. Of course, we've had deflation persistent, and finally we're seeing a liftoff, perhaps, of rates later today when the Bank of Japan concludes its two-day meeting in the building behind me, and then Governor Ueda will meet the press at 3:30 local time. The Nikkei, I got the alert at 2 o'clock in the morning. The Nikkei out with another scoop, essentially saying that in addition to hiking rates for the first time in 17 years, they will likely be scrapping the yield curve control, which has been in place since 2016, as well as scrapping its ETF purchase scheme, which has been in place since 2010, as well as the Japan REITs as sort of a backstop to the stock market. We all know that the equity market has done extremely well, and now it seems like all the pieces are in place with inflation, as well as those wage negotiations that came out much higher than expected with the Shunto and, of course, the Rengo on Friday, much better than expected. So perhaps Governor Ueda and the other 8 board members have indeed concluded that there is a virtuous cycle of inflation, and that is backed by wage gains. Let's talk about what is expected and then going forward, what it means for the money markets here in Japan. Let's bring in our next guest. Is Yu Bamba. He is with BlackRock. He is the Japan head of active investments. Thank you for coming out on a very chilly spring morning here in Tokyo. So you call this a very momentous day. How momentous is it?
Yeah, so nice to be here. Certainly a very big day. First interest rate hike in 17 years, as you said. It's quite a big deal. Also exit from other forms of, highly unconventional monetary policy, including ETF purchases and yield curve control, all happening in one day. So it is a big deal. And, we think that it is quite invigorating. It's quite positive because we all see this as a sign, affirmation, maybe, of the fact that Japan is changing, that we've entered a new regime for growth and strength. So it's all quite uplifting and momentous.
And it sort of removes the hesitancy that has been lingering in this market for some time. Now there's more certainty.
Yes, certainly. Exiting or stepping back from yield curve control, which happened last year, was one step. And now formally exiting negative interest rates. This was, a risk event that was on the minds of market participants for quite some time. And that will effectively be removed today.
What's your projection, if you will, for how they will project future hikes? How many hikes do you think will there be this year? Will they do maybe one and done, or two and then pause for a little while?
So first off, we think that they're going to engineer a dovish hike. We expect that they're going to be very careful in their messaging to not disrupt markets, to not alarm markets, and emphasize that this is going to be a highly gradual process, that they're not rushing into anything. And they want to do that so as not to disrupt markets, but they are also able to do that because in Japan, we don't have an inflation problem. There's nothing that they need to come in and to fight off. So they can afford to be gradual and remain accommodative, which will be positive for markets.
How many hikes this year are you factoring in?
We
and
think,
when?
Yeah, so we think they can get to 0.25%, maybe even higher towards the end of this year. It seems that inflationary conditions in Japan are quite robust in a good way, and so that will allow for more adjustments in monetary policy towards more normal state of monetary policy. So yes, I think it's entirely possible that they can do another hike or maybe even two by the end of this year.
So if there are more successive hikes, it's good for fixed income and the big brokerages and investment banks here, but you also feel that it's going to be very good for the equity market. Why is that?
It's good for markets in general because it increases the vibrancies of capital markets. Interest rates being positive is good for the financial market. It's also good for savers. So it's got those positives. And for the equity markets, it's not going to be an issue because interest rates are still going to be very low. I mean, we're talking zero handle, right? And in real terms, substantially negative. So it's still going to be highly accommodative and low and good.
And you don't think all of this is fully priced into the equity market at all? There's a long way to go.
There certainly is. I think that the market is highly pricing in and expecting the move today.
Yep.
So the move today will basically be a non-event in our view. But beyond that, the strength of Japanese equity markets, of Japanese corporates, of the economy as a whole has not been fully priced into the markets. I think it's also important to note that the world's most global investors still remain underweight Japanese equities. So there's more money that can come into this market.
What do you expect for the yen then? It hasn't moved much yet. Again, the yield differential with the Fed and elsewhere is quite substantial. So do you expect, though, the yen to appreciate considerably, or is it going to be a gradual creep upwards as well?
Yeah, it'll likely be gradual, but in the direction of strength. We think the yen is quite undervalued and has room to go up. It's not going to be that big of an event for equity markets. The FX markets is a bit of a sideshow for stocks, in our view, and should not really be a factor for the equity markets.
So you don't necessarily think a considerably higher yen is going to dampen corporate profits, though, and that therefore dampen the rise that we've seen in the Nikkei to 40,000?
Yeah, no, not necessarily. So we think that the move in the FX is going to be gradual, and the equity market can shrug off gradual moves in the FX. I think our view is that the drivers of Japanese stock markets today are not the FX. The FX is secondary, and it's more the fundamental drivers that are structural in nature, that are more real and fundamental. That's been driving the strength in Japanese equity markets, including the shift from deflation to inflation, corporate reforms, all those themes that are quite real and that are persistent are the main drivers and not FX.
Do you think the wage negotiations and the gains that the trade federations were able to secure, much higher than expected, does that truly represent the inflationary picture here, or are there still risks?
Yeah, no, we think it's quite real. I mean, it's also the second year. Wage growth were the highest in 30 years last year, and they're again even higher this year. So that shows the persistence of these dynamics of wage growth. And it's not just wage growth; CapEx too is at all-time highs. So companies are feeling much better about their businesses and investing in their people, investing in their businesses, and we think that creates a good virtuous cycle.
Is today really going to be a declaration of victory over deflation, or are there policy risks of withdrawing stimulus too prematurely? This happened in the past with the BOJ, and they were politically absolutely eviscerated for it.
Yeah, so I think that the last thing that the BOJ wants to do is stunt this, to kill this. So they're going to be very careful not to do that. And the move that they're going to make today is going to be quite incremental. They're going to bring rates to slightly positive, but still very, very low. And so the drivers, the momentum around wage growth and CapEx that we discussed, we think is strong enough to be able to withstand a slight adjustment to monetary policy.
Mama-san, thanks so much for your time. Go get some coffee. It's a bit chillier than we were expecting on March 19th here in Tokyo. It should be a lot warmer, but it's going to get a little hotter, of course, as we get closer to that rates decision around midday. We don't know yet. We're all taking bets on when it's going to be announced. But, of course, we're all waiting, of course, for any guidance from Governor Ueda at his 3:30 local time press conference.
Yeah, as you say, Steve, chilly on the ground, but certainly that air of anticipation is injecting a little bit of heat into the day. But we're going to be looking at all angles of the BOJ's pivotal decision later. Stay tuned for discussions with former central bank officials and analysts, including UBS Investment Bank's chief Japan economist. That's later this hour. Coming up, NVIDIA unveils new chips aimed at extending its dominance in AI computing. And we keep that theme going of central banks, of course, the RBA looking to extend its rate pause later on Tuesday. We'll have a preview ahead. This is Bloomberg.
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture.
That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
They're expecting more. The moment they see that's what you'll deliver, ask, now what? Here's what. You bring life insurance and protected retirement strategies from Prudential that deliver more. Who's your rock? Learn more at Prudential.com.
Can AI make chatbots act like your very own personal assistant? Yes, with ServiceNow.
My name is Nikolai Coster-Waldau, and I believe this moment in time will be when we started to transform the way we live to inform the future we want.
Let's go to a cooler place.
This show is about solutions and the people behind them.
The worm that can actually dissolve plastic.
This would be a carbon-neutral jet fuel.
This is an optimist's guide to the planet.
Jamie Lannister on the Roomba.
WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Wednesday, the Fed decides.
They are scared stiff of getting this wrong.
The markets are just primed for the big green light.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
We want to see more good data.
We're still seeing sticky inflation.
How dependable is the data?
How long does it need to be good? 6, 7, 8 months?
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern. Context changes everything.
Take a look at what we're tracking in terms of FX. Of course, the yen will be in focus. So arguably, we could see more of an impact in terms of what the Fed does later on this week than from the Bank of Japan. But of course, we've seen the yen briefly strengthening before edging a little bit lower once again. We had that Nikkei report that the BOJ may change that framework, tamping down rates against prevailing market trends and also ending stock ETF purchases as well. We, of course, continue to await for that potentially momentous decision. There's also another central bank decision that we're watching today, and that is, of course, the RBA, potentially less of a big move. We are seeing the yield curve from implied futures steepening for that fifth day ahead of that decision. But the RBA is widely expected to hold rates at that 12-year high on Tuesday. The economy continues to show signs of slowing. For more, let's bring our economics reporter, Swati Pandey. So much has been said about how aggressive, how fast, how elevated this tightening regime has been. How much weakness is there in the economy, and could that persuade the RBA to at least soften its bias?
We have the GDP data from the last 3 months of 2023, and that was really weak, and that followed on a pretty weak third quarter as well. And the monthly indicators, the more timely indicators that we have gotten in the past couple of months, they have been pretty weak too. Retail sales, for example, people aren't spending that much at an aggregate level, and unemployment rate has ticked up as well. So it's 4.1%. It used to be around 3.4, 3.6% last year. So that has gone up too. And people with mortgage, they are really hurting. Their repayments have gone up by a lot. So we are seeing the impact on the economy. The question is if it's a big enough impact for the RBA to drop their tightening bias today.
Yeah, and Swati, what are we sort of expecting in terms of the statement after? Are we going to get any sort of pushback? Will we see something that's hawkish, perhaps?
Look, the RBA is not known to change their statement a lot, meeting to meeting, but this year has been pretty different. It's a new regime. We have a new governor. We have a new process. It's a 2-day meeting instead of a 1-day meeting. There is a press conference. So, and this is the second meeting in that new regime, right? So we are not sure if they are going to change the statement again, if they drop that tightening bias, if they keep everything intact, because remember, we have a press conference conference now. So Michelle Bullock will have more time to explain the decisions, explain the nuance of the decision or the change in statement as well. So they could maybe perhaps be a little bit bolder than they have been in tweaking the statement.
Svati Pandey on RBA Decision Day. You can get a roundup of the top stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can find that at DayBgo. It's also right there on the mobile in the Bloomberg Anywhere app. You can customise those settings so you just get the news on the industries and assets that you care about. This is Bloomberg.
The world needs ways to reduce carbon emissions.
ExxonMobil can help.
We're working on solutions for our business.
That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
Everyone's talking about AI. But how can it help your business? Can it make chatbots act like your very own personal assistant? Yes. Put AI to work with ServiceNow.
The reception, the acceptance of Puro Sangue has been extraordinarily high. We had to stop the order for a while because we had to understand how to manage the supply chain. So there is a strong traction of Puro Sangue all over the world.
How much do you worry about increasing production and therefore becoming, I guess, less high-end luxury?
We are making 13,000, 14,000 cars per year. We will not grow a lot in the future because we want to grow more for value, not for volume. And maybe one number, you know how many cars Ferrari did we put on the road since the beginning, since the first one? 250, 260,000. So 250,000 cars in a market where there are million and million cars every year.
This is Hopper. Hopper changed the world. This is Blackwell.
That was the NVIDIA CEO Jensen Huang showing off the firm's new chips that are aimed at extending his company's dominance in AI computing. And I just want to put that in perspective. This conference that NVIDIA was holding has actually been compared to an AI Woodstock. So it really just gives you a sense of how much optimism there is, how much this is seen as a festival of sorts. And certainly, given the gains that we've seen in the run-up that we've seen for tech stocks over the course of this year, you really do need to have that positivity to continue to see any sort of huge gains and see that sustained over the course of 2024. We did actually see the Magnificent Seven. You can see that that's the last close for the index, but a gain of more than 2% overnight. That's the last close there. So twice the pace of the gains that we saw for the NASDAQ, even though futures today, as you can expect, we're coming into that Fed decision, fairly wait-and-see mode as well. But as we said, that focus on NVIDIA, this new processor that was unveiled, it's essentially one that is the successor to the Hopper chip that really has already been one of the most prized commodities in the tech world. So certainly a lot of focus on NVIDIA, as I said, in the session, but lots really to be tracking throughout the session today, Heidi.
That might be a little bit of an understatement, Phil, but I know what you're trying to sort of allude to, the fact that we're trying to keep on top of a lot of these major market-moving stories, right? And NVIDIA, AI, and of course we heard about Apple and Gemini as well, a number of kind of big headlines affecting the tech space and really directing us to where this next leg of this massive rally and the thematic AI story is going to head to. But of course, the other side of the story is watching what these various central banks do. We are on RBA and BOJ watch today as well. But in terms of linking the two, of course, any kind of seismic change when it comes to what the Fed does, what the RBA does, certainly is a different picture for the BOJ. But the changing rate regime, does that potentially create a little bit more of a headwind for these high-flying, growthy stocks in tech and AI, right? So far, we haven't seen much of an indication that they may be that impacted, at least when you talk about the Mag 7 and its sort of adjacent peers, that they would even be that impacted should we see much of an indication that the Fed could start moving soon.
Yeah, and really that kind of points to exactly the two sort of things that we've really had driving market sentiment. There's central banks, and as you said, there's that sort of repricing that's going on because June is now being sort of priced out for the Fed, and you've also got that reduction in what swaps traders are seeing it, for instance, and the number of basis point cuts we're going to see from Jay Powell and his colleagues this year. So I think pricing is now for around 68 basis points for the course of 2024. But certainly the AI rally has really been what's sort of underpinned all of the strength that we've had in Wall Street over the course of this year. But Heidi, really so many different stories, as you say, that we can track in this area.
Yeah, and a lot of grassroots stories too, right? Not just the Magnificent Seven and the big names, including this one Indian startup that we've been watching. They're making the nation's biggest bet on AI yet, Belle. That's thanks to a friendship, though, with the NVIDIA CEO, Jensen Huang. This is a company called Yotta Data Services. They've received the first shipment of thousands of coveted NVIDIA AI chips. Its CEO, Sunil Gupta, is looking to offer high-performance computing capabilities from data centers in India.
Today, India is dependent on chips in US or in some other country. Either they are not available or they are available at a very big cost. Once these chips are available in India from Yotta, from these buildings, Indian startups, Indian government, Indian institutions will be able to use these chips to build their own India-specific models.
We really want to get back to that focus on NVIDIA and the new chip that was announced. This is the moves we're seeing here, a little bit weaker in after hours. But let's bring in our senior tech editor, Nick Turner in San Francisco. And Nick, just so much focus on this successor to the Hopper chip. But just talk us through what exactly this new Blackwell chip is and the sort of demand we're likely to see it. Would it be something actually that supersedes the demand that we've had for the Hopper?
Yeah, I mean, I think you can. The demand has been so strong for the previous line that it's almost sort of only limited really by how much supply they can produce. So I do think demand will probably be equal, if not greater, for this. And they're, trying to broaden the market for these things in terms of going beyond the big cloud providers and into more kinds of corporations and government clients. So, yes, I mean, I think they're trying to steadily increase demand for the chip, and obviously, given the state of AI services and other data centers in general, it does seem like you don't want to say limitless, but certainly demand is very strong.
Could NVIDIA be limited by its relatively small scope of customers?
Yeah, I mean, I think that's maybe long term. One of their big challenges is just trying to sell to a broader base. I mean, who needs this powerful a chip? At the moment, it's sort of a limited group, and I think they feel like if they can go out and say, and they have a deal with Cisco to kind of help sell to a broader range of customers, and if they can go do that and convince people that they need their own AI systems, then they certainly can do that.
Our senior tech editor Nick Turner there in San Francisco.
Everyone's talking about AI. But how can it help your business? Can it make chatbots act like your very own personal assistant? Yes. Put AI to work with ServiceNow.
Find your ooh la la. Find it at your Twin. Celebrate wine and spirits during our Destination France event. Twin Liquors. We're in your neighborhood and all over town.
The top names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Well, the BOJ is widely expected to end its negative rate cycle in just a few hours' time. And our co-anchor of the China show, David Ingles, is joining us. And Dave, I mean, there's just so many different ways you can look at this, but what are you focusing on here?
Yeah, well, I think what's clear, and reports have told us enough that and they've told us for a while, I think is also the key point here, that markets have more or less coalesced their expectations on what's going to happen today, right? And I think the Nikkei news, and you've been talking about this, ETF buying, yield curve control, a rate hike is in the cards. And what's interesting, though, is ever since expectations of a change to the BOJ began, we've been tracking this yellow line, which is your 10-year yen swap, right? And you really see that start to diverge from the actual 10-year yield. Interestingly enough, but not unexpected, when the Fed started raising rates in early 2022. And as you can see, that gap has actually built along expectations that the BOJ might be forced to change its policy. What's interesting recently, though, and to my earlier point, is that the gap between the two has actually now fallen to 2022 levels, which to some analysts indicates that any changes today have been priced into the JGB market. That's one point. Now, that could change, of course. The other point I want to make, though, is when you look at the currency, which has been well-behaved recently, maybe on the news that we might get more changes from the BOJ today, has actually started to pick up. This is the yen overnight implied vol, and we're back to levels of flash, give or take last December. We've had two BOJ meetings since then. One was at spike right here, and I think the other one was around January as well. So in other words, brace for something else. And just very, very quickly on ETFs, of course, just watch for any changes if they do end ETF purchases. And here's a look at some of those ETFs. Mel.
Yeah, and Dave, I think it's when you put it in that sort of context, you can see it was really traders that were sort of ahead of economists in what they were expecting here, and they've been agitating for some sort of shift. From the economist perspective, it seemed like there was more of the focus on the wage negotiations, and would that number be strong enough out of it to sort of justify any sort of shift? But UBS is now among the market watchers expecting a rate hike from the BOJ in just a few hours, and let's get more insights now. Masamichi Adichie is the chief Japan economist at UBS Securities Japan. And I'm interested because you just recently changed your call as soon as a couple of days ago. So the wages number that came out, was it the headline reading that justified it for you, or was it what you saw for the smaller firms?
Yeah, I checked the small firm. I mean, I definitely was surprised that not only the headline, but also the small firms with firms with less than 300 people, their wage growth of the so-called base up is 3%. 3% wage growth is very, very great number for the BOJ because it's a 2% CPI and 1% real wages. So 3% is definitely a green light for the BOJ to go ahead.
And given that they are going to go ahead, it's that focus on the key rate here, the mechanism for how that's calculated, you're also expecting changes to that. What is it currently and how is it likely to change? And also, what's the significance of that, if any?
To answer your latter question, there will be no significant change. I mean, it's still actually, if you look at the overnight rate in the market rate, so probably the gain of the rates is probably less than 10 basis points. Even though the headline number of the policy rate will go up from minus 0.1 to between 0 and 0.1, that it's not a 20 basis point rate hike. It's a less than 10 basis point hike in the actual market.
It sounds like perhaps a lot of the market is expecting a one-and-done symbolic move from the Bank of Japan because the expectation has built up so much. But how much more evidence do you think you would want to see before we can actually declare a virtuous cycle, particularly when it comes to household sentiment?
Yes, we definitely need to confirm the recovery of the consumption. As you know, that the consumption has been very weak in the 2023, 3 consecutive quarters of the contraction, and the real wages still force is going to decline, and the second force is going to firm. So it's still balancing on how these dynamics will evolve in the next 6-12 months. And if the price up of the services is weaker than the decline of the goods prices, then BOJ has to say, hey, the process is still slow, so the normalization will be slow.
So there's a chance, just going back to, I guess, the psychological effect of the yen, unless we see an extremely dovish Fed later on this week, we may not see a huge strengthening in the yen. In that case, does that keep domestic sentiment, keep a lid on domestic sentiment because of how devalued domestic asset prices have been?
Yeah, I mean, I think the if dollar yen stays between 145 and 150, I think domestic sentiment don't deteriorate much. I think of course if it goes in just one day or something, that's definitely deteriorate the sentiment. But it's a gradual change towards 145 or something in next 6 months. I don't think that is a big shock for the Japanese domestic sentiment.
Some of the people we've spoken to on this program have said that perhaps the conditions would be there for the BOJ actually to need to cut toward the end of this year. Do you see any chance of a reduction on the horizon, even though if we get that hike later today?
I think the one condition on that is the Fed will cut the rates, aggressively in the second half of the year. I mean, for example, if U.S. economy enter recession and they start going to cut from more than 200 basis points in just a half year, meaning 50 basis points per FOMC, I think that BOJ has to do something. And I don't know whether BOJ go to the further negative interest rate policy or maybe government step in to buy more to form the new stimulus. I think the latter is more likely. But yes, if the U.S. economy enters a recession, especially severe recession with some kind of financial crisis, of course BOJ has to do something again to the dovish side.
Masamichi Adachi, really great to have you with us. He's the Chief Japan Economist at UBS Securities Japan. We'll get much more insight ahead into the BOJ decision. We'll be speaking a little bit later with former central bank officials. And in our next hour, stay with us for a look at the market impact. JP Morgan Securities Chief Japan Strategist will be along with us then. Well, the strong wage increases, of course, for Japanese labour may be just the trigger needed. We got that data towards the end of last week. To see some gains also in the country's small cap stocks, these firms have been hobbled by sluggish consumer spending for years. Our senior Asia stock reporter Hideyuki Sano joins us from Tokyo. So presumably wage increases leads to improved household spending, although that relationship is a little bit complex in Japan's situation. But investors are looking to kind of trade around this thematic.
Hi there, exactly. The surprisingly strong wage negotiation results are putting a fresh focus on Japanese small cap shares and domestic demand-oriented shares. Now, they have been underperforming the overall market very sharply so far this year. For instance, if you look at small cap index, the gain so far this year is about half of the largest companies, like Topic's Core 30, biggest 30 companies. And also, if you look at sectors like like food companies, transportations, air travels, these shares has risen just somewhere between 2 to 5% compared to like 20% gains in the bigger companies. So obviously investors are now looking at whether they are going to catch up with the market's rally now that it's becoming more certain that the real wages is going to rise from April.
So yeah, as you said, not quite the gains we've seen in small caps for some of the bigger names on the topic. So are they still considered cheap? But just tell us more about their valuation.
Right, this is a very interesting point. Historically, small caps tend to have a higher valuation compared to large caps. But at the moment, Japanese small caps are trading at premium over large companies. So if you think that we're going back to the historical pattern, then small caps look very cheap at the moment. They are now trading at 16 times earnings. That's below 17 times earnings for large caps. So if you think there will be mean reversion from now on, then it is a good time to buy small caps.
All right, that was our senior Asia stock reporter, Hideyuki Sano there. And, of course, a big countdown to the open of Tokyo starting to trade in just about 15 minutes from now. One stock that has been suspended, though, in mainland China and Hong Kong is Evergrande. It's been accused of falsely inflating its revenue by more than $78 billion in the 2 years leading up to its failure. For more, let's bring in our Asia investing editor, Russell Ward. Russell, so lots of twists and turns in this case, but just talk us through the accusations and the penalties that have been put forward by the regulator.
Good morning. Yeah, so the accusations are basically for a massive fraud here. Basically, it's $78 billion. That's just an enormous figure. And it concerns revenue reported for the year 2019 and 2020. So it's actually even before the real estate crisis erupted in China and at Evergrande specifically. And so what's happened is that the regulator has put most of the blame on Hui Kai-yan. This is the founder, the tycoon who's founded Evergrande, who's now under police control. He's been effectively detained by police since September. But these allegations are being made by the securities regulator, so it's actually a civil case. And he's been fined about $6.5 million and banned from markets for life. And also the former CEO and CFO have also faced similar bans. So this is a civil case, but the allegations are really enormous. Get your head around $78 billion of revenue fraud that has been allegedly inflated here. So, this is a civil case, but, there's probably more to come.
And could more to come be criminal allegations or criminal cases, right?
I mean, yeah, that seems to be the next step, without sort of preempting anything here. As I mentioned, Hui has been under police detention since September. So the civil case has been built, and now you would have to think and assume that the police is building a case also against him. Given the scale of the alleged fraud here, the inflation of these revenue figures, and that it's being squarely put on the chairman, that it doesn't look good for him.
Bloomberg's Russell Ward there with the latest on Evergrande. We have more ahead here on Daybreak Australia. This is Bloomberg.
The world needs ways to reduce carbon emissions.
ExxonMobil can help. We're working on solutions for our business.
That can also help businesses like yours. Heavy industry with low emissions. Let's deliver.
What's inside your ETF? Is the manager a jack of all trades? Is it run by an algorithm? With the Eaton Vance High Yield ETF, you know what's inside. Inside, you'll find thoughtful bond selection from fixed income specialists with bona fide active management credentials. Get to know what's inside EVHY, now available from Eaton Vance, the symbol of high yield done right.
The biggest ideas inspire new ones. What can you do with Spy?
Find your ooh la la. Find it at your Twin. Celebrate wine and spirits during our Destination France event. Twin Liquors. We're in your neighborhood and all over town.
A new report by Oxford Economics says Australia's carbon emissions are not dropping fast enough to reach its 2030 target. Let's bring up Bloomberg NEF Australia associate Tushna Antia, who has more on this. So they're likely to miss it by a couple of years. Can government policy change this?
Yeah, so in the short term, governments across Australia, both state and federal, are focusing on the power sector. And today there's a whole variety of mechanisms, policies and targets really aiming to decarbonise the power sector in Australia. The federal government's targeting 82% renewable energy penetration by 2030 and has promised to support 32 gigawatts of renewable capacity and storage in the years to come. Now, some states are a lot more ambitious, like South Australia, which is targeting to reach 100% renewable penetration by 2027. Now, states are going about this in different ways. New South Wales and the federal government are awarding contracts to new renewable and storage projects, and this provides some sort of revenue certainty for them, which essentially de-risks these assets, and this can spur a lot of private investment into the market. Other states like Victoria and Queensland are directly investing in renewables and storage, and this is through their state-owned body. So Victoria is supporting 4.5 gigawatts of renewables and has $1 billion of funding behind it to do so.
You mentioned South Australia there and what it's doing in this space. Does that mean that state government is the one leading the way here, and are there things that the other states or the federal government can take away from that?
Yeah, so Bloomberg NEF have ranked all the states and the federal government in Australia based on how their policy is supporting the uptake of renewables. And what we've found is that New South Wales actually comes out on top. Now, we've ranked these governments based on a few different criteria. So things like the level of ambition, so are these policies in line with what's needed for net zero, as well as things like the amount of funding, whether they're transparent and whether they're legislated. Now, New South Wales has started a biannual auction process, which I mentioned helps de-risk a lot of investment, and has also started developing renewable energy zones. Its policy is really transparent and it's on track for what's required for net zero, and that's why it comes out on top. Now, the Victorian government and the federal government rank in at second place. They both tie in at second place, and they both get full points for ambition, while the Northern Territory actually comes in last, and that's simply because they don't have enough substantial policy to support further uptake of renewables going forward.
That uptake, could it potentially support further energy uptake, or are there sort of hindrances that we're talking about here?
Yeah, so there are a lot of factors that can promote greater renewables outside of pure policy alone. And one big area that we're looking at is hydrogen at the moment. So Australia has big ambitions of becoming a hydrogen superpower and a green hydrogen superpower. And for that, we will need a lot of renewable energy supply. But there's a lot of policy around hydrogen today, and that alone could require an additional 4.5 gigawatts of capacity. And this is already on top of the 23 gigawatts of renewable capacity that we currently see online. So this could be a huge driving force. But at the same time, there are a lot of challenges and bottlenecks for the energy industry. Things like the grids are really taking a long time to build. Developmental approvals are taking a really long time again for renewable energy projects, and projects aren't as cheap to build as they once were. So we are seeing a lot of headwinds in the industry. So despite a lot of policy and ambition, there are a lot of challenges that governments and industries will have to grapple with.
of Bloomberg NEF Australia Associate Tushna Antia here. Taking a look at another story that we're following when it comes to renewables. Bloomberg's been told that China's LONGi Green Energy Technology plans to cut as much as 30% of its workforce. That would signal an acceleration of the reductions that began back in November. That was when LONGi started laying off mostly management trainees and factory hires. The world's largest solar manufacturer says cuts will affect only about 5% of employees. More ahead here on Daybreak Australia. This is Bloomberg.
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture.
That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
Can AI make chatbots act like your very own personal assistant? Yes, with ServiceNow.
Find your ooh la la. Find it at your twin. Celebrate wine and spirits during our Destination France event. Twin Liquors. We're in your neighborhood and all over town.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Take a look at how we're trading almost an hour into the start of the session here in Sydney. We're really not doing very much when it comes to Australian stocks. In fact, very, very cautious ahead of that RBA decision. We are expecting the RBA to hold rates at that 12-year high after that meeting. The economy is showing signs of further slowing. Unemployment is starting to trend a bit higher. So we're watching for really the narrative, whether there's a softening of that hawkish bias despite the cash rate remaining at 4.35% for a third straight meeting there. In terms of the Aussie dollar, we're seeing not too much of a move when it comes to the Aussie. Unlikely to significantly be swayed by today's decision. It's of course been under pressure by really iron ore prices falling under that $100 floor and also sustained ongoing weakness in the Chinese economy as well. Much more will depend, as goes for the yen as well, I should add, in terms of what we hear from the Fed. Is there an exceptionally dovish Fed narrative that we get later on this week? That will see a little bit more of an impact when it comes to where the Aussie dollar goes from here. We're sitting at about 65.56 at this point in Bell. We are watching the BOJ, but of course, a lot of what happens with these currencies does depend on the US central bank.
Yeah, certainly, and what sort of messaging we get from Jay Powell on Wednesday. But this is the outlook we've got here for Japanese assets, and we do have the Nikkei here just pointing to a slight drop at the open. Of course, we have seen a record-setting run for Japanese stocks. Been looking at the different corners of the market that could benefit the most. Of course, financials, you've got banks, brokerages, small-cap stocks also could be playing into this. But we're also just hearing from the finance minister, Suzuki. He's speaking in Tokyo, saying that wage hikes have shown an unprecedented increase. And so that's really sending a good signal about the Japanese economy. The strength of salary gains is something that has changed the views of most economists, including the likes of UBS that we spoke to this hour. They had earlier seen the BOJ saying it's staying on hold, but after we had those negotiations being announced, that was when they actually pivoted and said that we will see a hike later today. But Japanese assets looking like this, you can see those gains that are priced in there for the Topix Banks Index at the open, Heidi.
Yeah, and it'll be interesting to see how this record-setting rally of a run that we've seen for Japan stocks potentially at risk a bit from the Bank of Japan, of course, outperforming global peers. But that's been helped along by some of the loosest monetary policy in the world, in a world of divergence, right? Perhaps we have seen a peak for that. But take a look at what we're tracking. Financials and banks center stage today, of course. Traders anticipating an end to that negative rate cycle and also potentially enter ETVF program as well. Tech stocks are also in focus. NVIDIA unveiling those new chips aimed at extending the company's dominance in AI computing. Much more to come in the next hour.
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture.
That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
Find your ooh la la. Find it at your Twin. Celebrate wine and spirits during our Destination France event. Twin Liquors. We're in your neighborhood and all over town.
Everyone's talking about AI. But how can it help your business? Can it make chatbots act like your very own personal assistant? Yes. Put AI to work with ServiceNow.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
This is Daybreak Asia. We're counting down to Asia's major market opens. And Heidi, I mean, there's a few different stories in town today, but one of the main ones that we're going to be focusing on today is certainly the Bank of Japan. Are we going to see that first rate hike since 2007? And that decision is due at about 11 a.m. Tokyo time. Of course, the longer that it extends, it depends also on the fruitiness and the difference in their policy changes too.
That's right. Historically, it's been really interesting looking at the timing, of that sort of time plot, right? The later that decision comes, the more exciting potentially that could be. But we'll be watching that. We're also watching the RBA on RBA decision day as well, whether there's a softening of that hawkish bias, even though we're not expecting any kind of change or easing from the RBA just yet. But let's get straight to the markets on what could be a momentous day for Japanese markets, Belle.
Yeah, that's right. And as we said, it's that focus on what the BOJ does later in terms of their key rate, in terms of the program of yield curve control, the program for ETF, REITs buying as well. There's a lot of different things. The messaging we get out from Ueda in that presser later this afternoon, is this sort of a one and done scenario, or are we really changing off the back and setting a new course for the direction for rates? Certainly the strength of the wage negotiations is something that's been really heralded by the government, by economists that we've been speaking to, caught a lot of people by surprise. The question, of course, with that one is whether it trickles down from the large to the smaller enterprises here. But today, this is the setup that we're seeing, the Japanese yen holding fairly steady. You can probably expect it to stay in that sort of state ahead of the BOJ decision. But equities just a notch under pressure so far. They have been benefiting from a weaker yen. We'll see if that sort of trend continues, but lots of different areas and parts of the markets that could benefit from the policy shift, banks or brokerages. We've been talking about small cap stocks, just some of the things we're tracking here. Let's shift over, take a look at how Korea's coming online too. Don't want to lose sight of that market. The focus here today, again, a bit of weakness coming through, but we'll be tracking those tech stocks in particular because we had quite a bit of tech news overnight. Tesla saying they're going to be raising the price of some of its vehicles. You had news around Apple integrating possibly some of Alphabet's offerings into its iPhone, and then the new NVIDIA chip that's just been announced by the CEO Jensen Huang at their AI sort of conference or festival overnight, depending which way you look at it. But certainly we did see those big gains in big tech, Heidi, overnight.
Yeah, no big gains or no big losses either when it comes to trading in the equity session here in Australia on RBA Day. We're about an hour or so into the session. Some leadership being shown by energy and utilities. We saw oil holding that gain with those Ukrainian drone attacks on Russian refineries and the OPEC Plus supply cuts in focus there. So a little bit of upside there. But really, we are seeing quite a lot of caution being exercised here ahead of the RBA and the BOJ. This is the picture when it comes to Australian bonds. 10-year real yields rising about 1.8 basis points there from the previous day after a decline earlier in this month. But of course, we're continuing to watch to see whether the tone changes from Governor Bullock a little bit later on today. When it comes to the Aussie dollar, we're holding steady at 65.55. Alongside the yen, really the biggest trigger could potentially be how dovish does a Fed sound later on this week. Of course, the RBA decision is not expected really to fundamentally change the direction of how we see the Aussie trading, given the continued pressure that we see from metals prices, iron ore prices in particular, and that sustained weakness in the Chinese economy as well. As I mentioned, Brent crude trading just under $87 a barrel at the moment. Take a look at treasuries, really poised to move, regardless of really what the Fed does, right? Potentially at risk from what we hear on in that Wednesday meeting. But the 2-year yield in particular is sitting at that 2024 high. We've had Goldman Sachs really resetting their outlook when it comes to the Fed. We see the 5-year actually climbing to the highest levels this year as well. Goldman's forecasting now fewer Fed interest rate cuts this year. So we're seeing some market implied odds of that June cut being repriced, Bill.
Yeah, I mean, it's really just that big central bank focus. But let's get to the highly anticipated BOJ decision that's coming up in just a few hours. And our Chief North Asia correspondent, Stephen Engel, is live for us outside the central bank in Tokyo. And Steve, so much anticipation, but also so much that's sort of been reported already, at least in local media. So is there any sort of surprise that perhaps could come today?
Well, the only surprise will potentially come in the press conference at 3:30 later today, when Governor Ueda will meet the press and kind of give the rationale for whatever decisions that they do make, of course, which has been widely reported by the Nikkei and by other media here, sort of a foregone conclusion. Everybody I've spoken to, once the Nikkei and others have reported what we were also reporting yesterday. In addition, then, at 2 o'clock this morning, we got the report from the Nikkei essentially saying, in addition to exiting the the negative interest rate policy for the first time in 17 years. They're essentially going to also scrap the yield curve control, the YCC, as well as ETF purchases and also purchases of J-REITs, which they haven't done since 2022. And of course, the ETF purchase program has been in place since 2010, I should say. So there is a significant change in the mechanisms for monetary policy that will be usher in significant change here and a boost of confidence as well. And clearly, Governor Ueda, he signaled that this was going to likely come at some point. When we were last year here at the end of January, we were thinking it was going to perhaps be April, but again, the Shunto wage negotiations that really culminated with the Rengo results on Friday, which were much higher than expected, essentially plays into Governor Ueda's narrative that he wanted to see a virtuous, sustainable cycle of inflation backed by wage gains. So clearly, if the reporting of the Nikkei and others is true, at midday today or thereabouts, we're going to get that decision to exit the negative interest rate policy with a likely hike in the short-term policy rate, a benchmark rate of by about 0.1% to a range of 0 to 0.1%. And that, again, would be the first hike in 17 years. So, yes, a fairly momentous day here in Japan.
Our Chief North Asia correspondent Stephen Engle there in a very cold Tokyo, hoping that the BOJ will turn up the heat later on today. But let's bring in Carl Brodder, who's a senior market analyst at Capital.com, with his views. And Carl, the question is connecting wage gains into sustainable inflation into a virtuous cycle where households are spending. Do you think that part might be a bit tenuous?
I think it's particularly tenuous, and it would seem to me that it could potentially be a policy mistake if the BOJ was to tighten policy from here. Of course, it's only fairly marginal. I mean, 10 basis points isn't huge, even if it is from negative rates into effectively, positive rates, as well as, what is going to be a fairly timely tweak to yield curve control, and perhaps an opportune one too, considering that, we're not really seeing the kind of upward pressure on yields that we saw last year in global markets. So it might be a slightly more orderly transition to do it now. But to sort of settle on the evidence as we've received it now, that we have seen that sort of stable, sustainable and virtuous cycle taking off in Japanese economy. That means that inflation's re-anchored at 2% after years and years of trying to generate that outcome. Says to me that, again, there's either a policy mistake afoot, perhaps some incorrect economics on the basis of this, or even perhaps the Bank of Japan wanting to hike rates really on the basis to vindicate that it's actually got the job done. So at the moment, of course, we're lined up for a fairly significant policy change today, but my sense is potentially it's premature and could run contrary in the long run to Japan's economic outcomes and welfare.
You've not been partaking in this equity rally in Japan for better or worse, I guess, but do you think the move today, I guess removing the currency aspect, is going to make a meaningful change in terms of whether we've seen the peak for this rally?
Yeah, most certainly. And I mean, to sort of peel it back, we were chatting a few months ago, and the comment that I made was that it's the quintessential soft landing trade, the Nikkei, and lo and behold, despite the fact that it seemed unlikely at times to get sort of the level of disinflation globally that we have seen, as well as resilient growth, that's exactly what's occurred, and as a result, the Nikkei has rallied. Now, though, we're seeing a situation which things are becoming a little bit more precarious. The depreciation in the yen and the stability that we've seen in bond markets has really been generated from international dynamics outside of Japan in particular. Of course, the United States and the soft landing, a resilient economy that we're having there, and again, what seems to be a slow process of disinflation. But now we're going back to some domestic factors in Japan, this sort of tighter policy which could potentially restrict financial conditions. And in saying that too, a level of complacency going into this meeting, because if you do look at rates markets, there's a 50-50 split that they'll actually hike by 10 basis points, which isn't fully priced in, and suggests that even though we've had this kind of move in markets over the last few weeks in Japan that have seen a little bit of weakness coming through the Nikkei, as well as some strength in the yen, that's been unwound because of a US dollar story, and isn't fully discounted again in rates markets. So on the basis of that, of course, like I said, I've been sceptical to start with from the Nikkei's rally, and wrong about that. Now it looks like it is a potential inflection point because of this unwind of this kind of soft landing trade, and because this isn't fully priced into the market yet, a firmer yen yen will almost inevitably lead to a weaker Nikkei, and it does suggest that maybe the top is in, at least in the short term, for Japanese equities.
What about equities in other parts of the world, and the US in particular? Because, as you said, you had thought that a soft landing was sort of an unlikely scenario. Perhaps that's now coming to fruition. We're getting these changing expectations around rate hikes and fewer rate cuts being priced possibly for 2024. But then you add to it things like NVIDIA, for instance, announcing a new processor or chip overnight. That could spur further gains, for instance, in tech.
Yeah, absolutely. And I mean, again, reflecting on where we started at least the year, I suppose we are getting to the end of the quarter now anyway, is that, you know, there really two things that drove this kind of market higher and sort of presented this big contradiction in the equity rally, is that markets were simultaneously pricing in resilient growth in company earnings, while at the same time pricing fairly significant rate cuts, which would indicate, you know, a much weaker economic environment in the year ahead or so. Lo and behold, it would seem that we are getting that kind of resilience in economic growth, but as a result, markets are pricing out those rate cuts, and equities have been surprisingly resilient despite that. I think the core concern, and this is going into the Fed now, is that maybe policymakers and market participants have underestimated perhaps where the neutral rate is for policy, that maybe real rates at 2 to 2.25% in terms of real rates isn't sufficiently restrictive, and we're starting to see that kind of reflected in rates markets across the world, as well as a sort of lift again in bond yields to suggest that, again, effectively policy rates where they are now aren't sufficiently restrictive, and there will therefore be this higher for longer dynamic and maybe even some upside risk to rates going forward in order to bring, obviously, inflation back to target, knowing that over the last, say, 6 months or so, there is some evidence to suggest that it's re-anchored around 3%. So you add to the fact that, you know, we have this dynamic that equities have managed to rally despite this pricing out of rate cuts, and really it's been driven, like you noted, by this sort of AI mania and the news, buying into news and momentum off the back of this sort of news. It means that valuations look a little lofty in tech at the moment. We've already seen a pullback in the last few days as the market shifts towards potentially 2 rate cuts in the year ahead, but that could persist a little further, especially if policymakers as well as market participants reassess where neutral rates actually happen to be.
Just in the last few minutes, we've been getting an update on a Chinese developer, Sino-Ocean, and we are hearing from the company that they're still in the course of finalising their full-year results for 2023, but they are seeing a full-year loss attributable ranging from 20 billion to 23 billion yuan. How much further do we need to see the woes in the property sector continuing? How much has been priced in? And also, how does that play into your outlook for mainland equities?
Well, this is one of those time frame questions because, I mean, I think if you look at in the short term, and this has proven true probably over the last month or so, there is a fairly strong opportunity for traders in Chinese equities, in particular, really on the basis of very depressed valuations and technical factors, so a reversal of momentum. Not only that, I mean, I think the sell-off that we saw in February, which led the market to 5-6 year lows, depending on the index that you happen to follow, was really driven again by technical factors and a sort of simmering panic around financial stability as well as financial outflows, which to the credit of policymakers, they were able to curb quite successfully, take some risk out of the markets, and therefore we have seen this rally in Chinese stocks. Still, we're seeing technicals fairly favourable and valuations suggesting that some opportunities to the upside there. But I don't think what markets truly get in China is that effectively China remains very, very focused on its long-term objectives. Those objectives are things like deleveraging, decoupling, modernising its economy, re-establishing trade relationships and what have you. And those things can't be achieved if we start to see pump priming of the economy through either easier monetary policy or fiscal policy, which means that either one of those things have to be, the long-term objectives have to be achieved or abandoned before we see this sort of big bazooka policy, which will lead to a sustainable lift and removal of the country risk as well as regulatory risks that are plaguing Chinese markets. So again, in the short term, technicals and valuations are very favourable, but for allocating long-term capital, there's still significant risks associated with effectively putting long-term money to work in Chinese markets.
All right, that was Kyle Rodder there, Senior Market Analyst at Capital.com. As we head through the morning session, 15 minutes into trade so far for Seoul and also Tokyo, but that focus on what we're seeing this morning amongst some of the groups that could stand to gain from any sort of BOJ hike. Later today, of course, that's the expectation by traders, by economists, a lot of people that we're speaking to. But these names, they could be among the beneficiaries if we do, as I said, see that higher rate today, or an exit at least away from negative rates. But let's change on. There's another group of stocks we're tracking this morning, and these are the tech names today, because we did actually see the Magnificent Seven up around 2%, an index that we have at Bloomberg overnight, so about twice the gains we saw for the NASDAQ. We did actually see NVIDIA as well unveiling a new processor, so it's a successor to an earlier one that already had sparked so much intrigue and so many sales as well. A lot of focus on that name. But today in the session so far, big tech, a little bit weaker, Heidi.
Coming up, we get more market analysis of JP Morgan Securities talking through their Japan equity strategy ahead of the Bank of Japan's widely expected rate hike now. But first, more on China property. Evergrande accused of falsely inflating its revenue in the 2 years leading up to its failure. We have the details next. This is Bloomberg.
Can AI make chatbots act like your very own personal assistant? Yes, with ServiceNow.
Find your ooh la la. Find it at your Twin. Celebrate wine and spirits during our Destination France event. Twin Liquors. We're in your neighborhood and all over town.
Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time, and they sold their content to, what was it, Peacock.
Yeah.
And that was really smart, too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
The Fed decides.
They are scared stiff of getting this wrong.
The markets are just primed for the big green light.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
We want to see more good data.
We're still seeing sticky inflation.
How dependable is the data?
How long does it need to be good? 6, 7, 8 months?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern. Context changes everything.
This is Hopper. Hopper changed the world. This is Blackwell.
That's the NVIDIA CEO Jensen Huang there showing off the firm's new chips, and you can see, as he says, there's the H100 and then there's the B100. So the Blackwell is seen as the successor to the Hopper chip.